Well, good morning, everybody. Thank you for attending our symposium today. My name is Tabitha, and I'll be your moderator for today's breakout session. Before we get started, we have a couple of housekeeping items to go over. Please, if you have any questions, use the chat box that's located at the bottom of your screen. Please wait for me to call on you. We are asking that you do not engage in private chats because this whole session is being recorded. With that said, you will be able to see this presentation after the symposium concludes because we will have it posted on our website. And please do not forget to fill out the survey that was emailed to you. With that said, I'm going to go ahead and hand it off to Anthony.
Good morning. Welcome to the award maintenance, the nitty gritty. We're going to be going over several different topics this morning. The one I'm going to start with is expenditures, specifically the business purpose on those expenditures. Okay, the business purpose is required for all types of payments, Lobomart requisitions, Chrome River expenses, P-card reconciliations, petty cash reimbursements, labor distributions. It is also required for the business transfers, cost transfers, labor redistributions, and journal vouchers. Basically, what a business purpose is it's an explanation of what's being purchased and how it's going to benefit the university and specifically the project. The other purpose of a business purpose is that it's used by the fiscal monitor to verify that the purchase is following university administrative policies and procedures, and also external policies and procedures. Examples of the internal policies and procedures are Policy 4000, allowable and unallowable expenditures, Policy 4030, travel, Policy 4320, purchasing off goods off campus. Examples of the external policies and procedures that we have to follow are UG, Uniform Guidance, and the FARs for federal contracts. Also, a lot of the agencies have their own guidelines as to what's allowable and what's not allowable. So we need the business purpose in order to determine if that particular purchase is allowable or not. Now, the main difference between a business purpose for an original purchase and a cost transfer is that with the cost transfer, you have to explain why you're transferring it and how it's going to benefit the new award or project. So the required information is who, what, when, where, why, the original banner document number, and the original posting date. We need the original posting date so we can determine if a 90-day memo is required or not. The original banner document number is needed so that we can see that expense going on and off the index of the project. We also require that you provide us your name and contact information in case we have any questions. The next topic I'm going to be discussing is budgets and budget revisions. Okay. Put simply, a budget is a list of all planned expenses and revenues. Basically, it's a plan on how the money is going to be spent throughout the life of the project. The budget is actually prepared at the proposal stage or the award acceptance stage of the award process. It's the information provided to the sponsoring agency on how the money, how much money is going to be needed to complete the scope of work and how it's going to be spent. So the two main forms associated with an original budget is the award budget sheet, the ABS, and the budget justification, which is just a more detailed listing of all the account codes and how and the funding associated with those account codes. Please note that the ABS, it must match the budget that was provided to and accepted by the sponsoring agency. So there can't be any kind of discrepancies between those two budgets. Now, throughout the life of the project, there may come a time when we have to do a budget revision. Someone wasn't hired, so there's cost savings in salary. And it turns out the department has spent more money in supplies. To get the money from the salary to the supplies, we have to use an internal budget revision, IBR form. So it's a mechanism to get that money transferred between account cost categories. It's also the mechanism for the fiscal monitor to determine if agency approval is required or not for that internal budget revision. Normally, you would be able to tell if if budget revisions, approval for budget revisions is required by looking at the award documentation. It's usually there. If it's not there, then it's in the agency's policies and procedures. So you have to look at those two places to see if something is required or not. If you're not sure, go ahead and contact your fiscal monitor, and we'll either know or we'll figure it out. Okay. Now, often when I get a budget revision, and I have to request that, or I tell the department, this needs prior approval from the funding agency, I get back a response saying, well, this is under expanded authorities. Yes, expanded authorities does allow us to rebudget without getting prior approval from the agency, except it's only useful in certain situations. If it's a federal contract, if it's a non-federal award, expanded authorities doesn't apply. And even in those cases where expanded authorities does apply, there are exceptions. For example, change of scope, reduction of key personnel more than 25%, adding a subcontract that wasn't on the original proposal, that's always going to require prior approval just to do it, let alone to rebudget. If there's going to be a change of more than 10% of the program, that requires prior approval. If you're transferring funds from training, participant support, that's going to require prior approval. And some requirements are agency specific. For example, Department of Justice, if you're transferring funds for foreign travel, then you need prior approval. Okay. The difference, and then there's difference between grants and contracts. Remember, contracts are a lot more restrictive than budget or grant. Contracts are more restrictive than grants. And again, it depends on the agency and how the contract is written. And just some agencies are more restrictive than others. For example, Department of Energy and the National Labs, Sandia, Los Alamos, if non-foreign travel was not on the original proposal, then they need prior approval. If equipment is being purchased that wasn't on the original budget, then you need prior approval. Just a reminder, anytime one of your PIs or faculty people are going on a foreign trip, you need to get prior approval before they make that trip. That's just one of those bugaboos that we had to do. Okay, so just some other things that require prior approval. If you're moving funds between stipends and salary or vice versa, you have to get prior approval. Again, if you're not sure if the fiscal contact your fiscal monitor, and we'll help you out determining if something requires prior approval or not. Now, the actual process to do a budget revision is to prepare an IBR, an internal budget revision. This is actually in our website, so you can actually get it from there. But when what you do is you prepare the IBR, and you're also preparing a full justification as to why you're making these budget adjustments. When you prepare it, though, remember that if you're changing things in certain account codes, it's going to affect F&A. For example, the account code 9000, which is equipment, tuition compensation, rentals, account codes, subaward account codes, participant support account codes. All those are excluded from the F&A calculation. So if you make changes to that, it's going to change the F&A. For example, if you increase those account codes, you're going to be decreasing F&A. If you decrease those account codes, you're going to be increasing F&A. So just remember that when you're preparing the IBR. Once you prepare the IBR, it's forwarded on to the fiscal monitor. Fiscal monitor looks at it, determines if prior approval is needed or not. If it's not, then he or she would then enter it into the system and it'd be done. If it does require prior approval, it's forwarded on to the Office of Sponsored Projects. Office of Sponsored Projects would then contact the department if they need additional information. And all this is actually done through that workflow process sometimes. But no, that's another thing. Anyway, so the Office of Sponsored Projects forwards the request on to the sponsoring agency, and they would actually be responsible for getting the appropriate signature from that sponsoring agency, someone who's authorized to do the budget revision approval. Once they get that back, though, it's forwarded on to the fiscal monitor, who then enters it into the system. Okay, so that is the budget revision process. Now, the next topic is going to be subaward maintenance. And that's going to be discussed by Elena. Thank you. All right, we're having some technical problems.
Okay. Looks like I need to back up some. Oops. Okay, here we go. Okay, so what I'm going to discuss today are a few topics, but one is subaward maintenance. In every subaward contract or award, we do have the index CGA email address for them to submit the invoices to. This is so that if your fiscal monitor is on leave, the invoice can be forwarded to somebody else to process in a timely fashion. The fiscal monitors do submit the invoices through workflow to the admins. The admins then work with the PI. The PI can review the invoices and certify that the work or deliverable that's invoiced or the costs are accurate and allowable. It is important to do this quickly because according to uniform guidance, our invoices need to be paid within 30 days. If they're going to deny the invoice, then we receive it back in workflow and then reach out to the agency. It also is important for the PIs to work with the subawardees to make sure that they invoice timely. Kwaku will discuss a little bit about that in the future slides. It is the PI's responsibility to monitor the subaward if they have a cost share and to monitor their performance and their schedule. If there are any modifications or budgets or extensions that need to happen regarding their subawardee, then they have to prompt that through OSP. So we're going to talk a little bit about cost share. I do want to let you know that we are going to have a departmental cost share guide to post on our website for reference. This is just going to be a very quick, high-level overview. We do have three types of cost share. We have mandatory cost share, and that is a cost share that is required as a condition of acceptance for your proposal by the funding agency. Voluntary committed, it's offered during the proposal, but it's not really required by the agency for you to be awarded the grant. It is not necessary, and sometimes people feel like if they voluntarily commit a cost share that it gives them a better chance of being awarded, but that's not always necessarily true. And then voluntary uncommitted cost share is what we, the expenditures we put on there that are above and beyond what we've committed. There are three different methods of cost share. We have the cash contribution, and that's where UNM will actually bear the direct cash cost of the cost share. We consider this to be the most favorable because usually the institution does have the support already in place, and we do track that in its own separate index. In-kind cost share, this is where the cash cost is not borne by UNM. We do not track this in our system, and so the department must track this. So that's going to be for things that are like an emeritus professor that volunteers his time, or tuition remission, Those are things that are not in our system, so the department's responsible for tracking those. And then third-party cost share, those are typically goods or services by another outside non-federal entity. This is the highest risk cost share that we have because we are relying on the accounting and the completion of an outside agency. They are required to provide a memo or some kind of documentation saying that they have completed the cost share. The high risk about this is if they do not complete the commitment, then UNM is legally obligated to fulfill that. The responsibilities of the cost share of the department are to provide a budget from an unrestricted index, and then the financial review during the life of the award to ensure the cost share is met and that it meets UNM policy and guidelines. Before you can have a cost share, the dean or director has to approve the cost share request and make sure that the funding source is adequate. It would then go to OSP to review the approvals, the terms and conditions, and any changes that are requested throughout the life of the award. Contract and grant accounting, where your cost share is concerned, we set up the index. We transfer funds from the unrestricted index that's designated. We do all the financial reporting for cost shares to the agencies. We also, during the life of the award, monitor the allowability of the expenditures. And in closing, we have to confirm that the cost share is met. And this is when, if it's an in-kind or a third party, we would reach out to you for all the documentation you've been keeping during the life of your award. We are going to discuss just briefly program income. Program income is actually a small amount of income usually earned by the support or the activity of an award. We do track this in a separate index, and examples for program income would be, let's say you have an educational award and you're going to put on a little training or a conference and there's a fee to attend. That would go into your program income. And also sometimes when we have like foundational awards, we get a large lump sum of money, and it's part of the condition of the award that we draw interest on that lump sum and report it, and that would go into your program income as well. All program income expenditures do have to be in line with the scope of the main award according to uniform guidance. And also according to uniform guidance, the program income must be spent. We cannot have a remaining revenue on a program income index. That's also according to uniform guidance. So now I'm going to turn this over to Kwaku, and he's going to discuss invoicing and reporting.
Good morning again, everyone, and thanks for joining us. In the next few slides, we'll be talking about invoicing and reporting on a grant. We'll also do a quick review of closeout and things we all can do to make sure that the process goes smoothly. So all grants, require some sort of reporting or invoicing to the agency or the sponsor. And billing or invoice comprise of a cash drawdown to the sponsor to pay down the award. The basis for the drawdown can either be in the form of a cost reimbursable or fixed price on the award. Cost reimbursable means that we are submitting the invoice based upon the actual expenditures posted to the grant's general ledger. And this part of the invoicing is important, and especially this is where your role as a department administrator comes in, because in the case of cost reimbursable billing, usually the agency or the sponsor requires us to submit all backup associated with the request. That is especially the case with the state award. Sometimes that is not so much the case with some federal awards, but especially state and private sponsors. Some private sponsors also requires that. Fixed price, on the other hand, is where the sponsor pays an agreed amount for a deliverable, irrespective of the cost of the award. So during the initial stage, when the contract for the award is executed, UNM and the agency agrees that, for certain milestones or whatever, or deliverables, UNM can bill for those, can submit invoices. Sometimes fixed award also means that the entire award is paid in advance. But if it's in the case of a fixed schedule, it means that UNM or your fiscal monitor has to submit a quarterly invoicing or monthly, and if it's a multi-year award, on an annual basis. For fixed price award, usually we have to submit these milestones or deliverables report with it. And those reports are the responsibility of the PI. We need you as a department admin to help us to make sure that we get those reports so that we can submit the invoicing on time. Technical reports are also an integral part of most grant agreements. The key takeaway from here is we want to make sure that we are not delinquent or late on this report, as it will affect future funding for the university, and of course, the PI in particular as well. Technical reports are also, we say they are technical report, but they are also progress report or performance report that the PI has to submit. And as you can see here, is the responsibility of the PI to make sure that these reports are submitted on time. There are a few cases that we have difficulty getting, making sure that the reports are submitted on time. When these situations like this happen, we escalate this to your fiscal monitor will let CNJ, contracts and grant management, know. And if they cannot get a copy of the report, this is escalated to the OVPR office to make sure that we get a copy of the report. And generally, we do not need a copy of the full report. We just need a screenshot, something to indicate that the report has been submitted to the agency. And in the next few slides, we'll talk about closeout. Closeout simply means that the award process has come to an end, which at this point, hopefully all reporting requirements, technical, performance or financial report has been submitted to the agency. The following are suggested monitoring report that we recommend throughout the life of the award to enhance, closeout processes. Ideally, we want to make sure that we are consistently applying the terms and conditions as stated in the award in any applicable state or local and federal regulations, that we are using generally accepted accounting principles in terms of cost allocation to the grants, and that we are following universities' policies, policies and procedures as well. Another tool that we think is beneficial for award monitoring leading to closeout is a burn rate. And what is that? It's a percentage of award dollars spent relative to percentage of time on the award. This is important because sometimes, especially with federal awards, if they want to give you additional funding, they want to make sure that at least you are spending what they've currently awarded you. But more importantly, what I see as a great tool here is as a department admin, it gives you a total control of your award expenditure. You are able to see how your spending is progressing throughout the life of the award. And we have a lot of resources on our website in terms of burn rate tool and resources that if you aren't already doing that, that you can use to do that. I would say when I was a department admin, that was one of the effective tools that I used. And if my PI or department chair asks me a question because of this tool, I'll be able to clearly tell them where we are with the grant expenditures. Here are additional tools that we recommend as well during the life of the award. The burn rate tool, of course, will allow you to make sure that if equipment expenses are being incurred on a timely basis and not wait till the end of the award, that your sub-recipients, if you have a sub-award, that they are submitting invoices on time. Participant support in this case, because it's important because we don't want to return funds back to the agency. And the PIs are putting the appropriate effort required by the grant. Also, that you are not waiting till the end of the award to do significant labor redistributions. If costs were, for example, located somewhere before the award was set up. And of course, that you want to be making sure that appropriate documentation are being kept throughout the life of the award. Here are my report tools that we recommend. I like most of you are familiar with it, so I'm not going to go through them, but I like the contract and grant ledger executive summary, as that gives you a complete snapshot of your grant on a monthly basis after banner report. So if I were you and I work in the department, that is the first report I will run. And of course, after that, you run your grant general ledger summary and detail to sort of use that to populate your burn rate sheet. So closeout. Uniform guidance requires us to close grant after grant and to close them out, use the 90-day process to close them out. And that is also the requirement of the university leadership, including the controller's office. The process allows us to make sure that if there are any liquidation, that we are able to do that within that period of time. And also, if there are any unobligated funds that we need to return to the university, it allows us to do that. So it's important that at this stage we all work together to do that. But besides that, also it's a huge requirement, and it helps you to get things off of your plate, so that they are not hanging out over it. So usually there are some risk at the end of the award when, and we want to make sure that we avoid them. So we want to make sure that, like technical report, progress or performance report that we talk about are submitted on time. The gone out requires funding agencies such as NIH and NSF to submit their report to Congress on time, usually on time. So that means that PIs have to submit a report to the agency on time so that they can in turn submit their report to Congress, which has to happen usually on an annual basis. It's also important that you are not doing significant cost transfers at the end of the award, as we talked about earlier, because these tends to be heavily scrutinized by auditors. Appropriate effort are being placed on the grant based upon the terms and conditions and by OVPR policy as well. We want to make sure that throughout the life of the award, that we are spending it down and not wait at the last minute where we try to do significant cost transfers, which might be scrutinized during audit purposes. And of course, if there are any cost share commitment, we want to make sure that before the award ends, that we've met those commitments as well. So here is a snapshot of our closeout timing process. Because of time, I'm not going to go through all of it, but I'll just highlight a few things. Usually during this timing process, the process starts about 6 months leading to the end of the award. And by that time, the key thing you want to be making sure is that you are spending down on the grant based upon the performance period, using the burn rate to guide you to do that. And that the budgeted expenses and the budget, sort of your actual expense correlate with your budget. Then 90 days leading to the end of the award, the key thing you want to take away from here is this is when you receive a reminder from Banner that the Banner workflow is triggered for you to either extend or close out the grant. And you will know that because 6 months before you were tracking it to determine whether you need to request no cost extension or anything like that. Then of course, 60 days leading to the end of the award, you want to make sure that if there are sub-recipient, sub-award or anything like that, personnel expenses, you're reviewing those and make sure that all charges are posted. Ideally, that you spend the grant down. 30 days after the award, and the key thing that you want to take away from here is that this is the time your fiscal monitor will send you a closeout reconciliation form telling you the total expenditure on the award. I want to mention that the numbers that specifically that we state on the closeout reconciliation form are not final numbers. It could change leading to the end of the closeout. But the most important thing is throughout the process is when you receive the reconciliation form through workflow, that you complete it and you return it. Because 30 days to 60 days leading to the end of the award, we can still make adjustment. So the workflow process is important because what it does is it increases, it creates efficiency for all of the parties involved, which is the PI, Department Admin, OSP, and contracts and grant. It allows us to see, who has to take action at each stage of the process. So it's important that one person doesn't hold it up. That is why it's important that, especially if it's in your queue at a department, that you complete it and that you return it on time. And if it's in your fiscal monitors Q2, you can reach out to them to do the same thing. But ideally, they are returning it to you on time. I talk about the 90-day process leading to you getting the closeout, and we also talk about, returning the closeout to to contracts and grant. We can make changes during that time, so you do not need to hold it up. Here is a snapshot of the workflow process. So for example, if you were to extend a grant or close it out, you choose one of these things, one of the statuses over here to determine what you need to do. And here is also a snapshot of uploading a document to to the closeout system. If you receive a reconciliation form or a patent report request through the workflow process, returning them to your fiscal monitor. So Elena is gonna talk to you in the next couple of slides about our websites and other resources.
Okay, so I'm going to go over this really quick because I'd like to leave time for questions. The contract and grant website has been under construction and we have done quite a bit with it. If you would go and look there, you would find all kinds of resources. We have policies, closeouts, travel, basically answers to almost any question that you could find or have. One of the things I do want to touch on though during this presentation is the effort certification. This is a process that's federally mandated that we go through twice a year. We are getting ready to roll out a new effort certification period. So there is instructions on there about what training is required, quick guides on how to do it, and also the main effort reporting email. This is really good, especially if you're a new admin, because there are things that have to happen for you to be able to complete that responsibility. Also, we have a tab that has all of the policies, federal regulations, different agencies, the expanded authority or prior approval matrix that Anthony was talking about earlier is listed on the federal agency tab. Frequent UNM policies that you have to reference for grants. It does have items that Kwaku just talked about for the closeout timelines, checklist notes, and how to use workflow. So when you have a chance, take some time and go look at our contract and grant website. It's something that we're really proud of and we've done some work on. So now I'm going to open this up for any questions that you guys might have.